Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday the 13th, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen with gold closing at the lowest price point this year, closing off about $4.80 at $1241.80. What is critically important is not the close, but rather the intraday low. We'll discuss that in detail. Silver loses about 14 cents at $15.83, and that is in light of a fractionally lower US dollar at 94.46. The Dow gained 94, but it did push it above 25,000, closing at 25,019, and fractional gains in Bitcoin futures at 61.80. Traders, although gold did close lower, it did close above a critical level of support, which we are currently earmarking roughly at 1240, and that matches roughly with the recent lows that came in back of December as well as January of last year. That is not what I find most noteworthy about today's activity in the market, because what is most noteworthy is actually the intraday low that came in, because for the first time since we have gone into a rally mode, we have actually had a lower low than the previous low. Now, while by itself that might not be that foreboding of a piece of technical information, when we couple it with the size and extent of this recent correction, one, and secondly, we also add to that the fact that we have identified a death cross, and that, of course, is the point in time in which the shorter-term moving average moves below the longer-term moving average, and that also is a good indication that what we might have witnessed is the point in time in which a short-term correction morphs into a long-term trend, or we have just moved into a bear market. And that is something that is absolutely worth noting. However, traders, even though the information I'm about to present will cast gold in an extremely bearish light, we have to realize that these market moves are fundamentally based. And with the potential of a full-blown trade war about to emerge and other issues within the marketplace, we could easily see this bear market move back into and flip into a bull market. Nonetheless, the facts that I'm going to present are clear and definitely indicate the potential of a major shift in market sentiment. And in order to do that, we really need to first compress this chart and compress it to the point in which the market hit its absolute highs, and that of course is at around 2011, when gold traded as high as it ever has, which is 1900 plus per ounce. And what followed was some interesting activity. Of course, we had a series of sell-offs, and then for the longest period of time, really almost 2 years, we were caught within a defined trading range with about 1550 as our lows in the market, and in terms of our highs, those came in at approximately 1800. And we would see the market oscillate between this particular price point and price range until in July of 2013, we had a major break, and then we began the steepest part of the decline, in which we saw gold go from roughly 1550 through a multi-year correction until it settled at the end of 2015, 2016, when prices reached $1,040. And traders, without question, that is the single moment in time in which we went from a bear market back into a bull market, because that's the point that we really saw our rally begin. And the way that we can technically confirm that is that we would have a series of highs that would come into the market, subsequent corrections, and then for the most part, the lows that would come in following the previous lows would be higher lows, and the highs that would come in following the previous highs would be higher highs. And that would occur for a series of years until we hit this absolute resistance point just above 1360. But nonetheless, even up till this last low that came in at the end of last year, beginning of this year, we can certainly still make a case for a bullish scenario because we still maintained a series of higher lows. However, that all changed today. And the change that I am referring to is the fact that for the first time, we have now had a lower low than the previous low, while at the same time, we observed very recently the fact that we had this death cross come into the market, which is the point in time in which the shorter term moving average moves back below the longer term 200-day moving average. Traders, there's no doubt this market is fundamentally driven. Recent weakness in gold is directly tied to dollar strength, and at any moment that could change. However, on a technical basis, what we are witnessing with the lower low today is certainly foreboding, and it is certainly something that we want to pay close attention to. Traders, while the topic of today's report was foreboding and bearish to say the least, realize that this market is absolutely fundamentally based. Changes within the trade dispute morphing into a trade war could certainly change that on a dime. And that's the major caveat of what we talked about today. We are definitely in a bear market. However, that could change at any moment. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for another daily update and review. Bye-bye.